Hello, everyone. Thank you for joining us this morning, and welcome to this educational presentation where today I'm going to be introducing something I'm really excited about. This is something brand new to specialist trading and ProTrader strategies because we've never done it before. So I'm going to be talking about our masterclass series. This is something we just put together and designed to educate you even more, to take you into a deeper form of education and to really go into detail about how we want to educate you as traders, hopefully to take you to the next level. So this promises to be a great presentation. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. And as you just heard, we are all about educating you as traders. We feel that that's really what's missing for most traders and roughly why most traders fail. It's been estimated upwards of 80 to 85% of all traders fail. And so the reason, in our opinion, is not because they don't have the perfect strategy or the perfect market to trade or perfect time frame. It's more about their education. They haven't been educated properly, and they're relying on someone to do it for them. Once you have the proper education, you can do the, your own trading, make your own decisions, and this will kick your trading into the next level, into fifth gear, so you can actually be consistent. 2 steps forward, 1 step back. So that's what we're trying to provide you as traders, methods and tools and techniques that have stood the test of time, and educate and mentor you so that you can really be in charge of your own trading. Now, I'm going to talk about our special masterclass today, which actually does that in detail in a 4-week series. But before we begin, please take a moment to view our disclaimer. I'm going to show you a lot of performance results. I'm going to show you the curriculum of this masterclass, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And once again, all examples are strictly for educational purposes only. So as you're taking a moment to view our disclaimer, I would also like to take this time, if you haven't done so already, to invite you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down. Every day I post different information, anywhere from little bits of wisdom to actual signals that our strategies have generated. Posted some great information about a trend identification tool I'm going to be speaking a little about today, the PET-D, just a few days ago, on how it may be interpreting what the markets are going to be doing. So there's a lot of great free information, so feel free to follow us on Twitter. Now, as I stated, we are a little bit different from most companies, most webinars that you may be attending or have attended in the past, in the fact that we're not here to promise you the most outlandish strategy you've ever heard of, or system, or that generates phenomenal numbers of percentage points every month. We don't believe in that. We're here solely to provide you with education. As you can see here, my goal is not to force feed you signals. My goal is not to force feed you a perfect system or time frame. My goal is simply to teach you how to trade with the specialist edge. Now, some 40 years ago, when I first started trading, I struggled just the way many of you may be struggling as well right now. And I was lucky enough to have some mentors who taught me the same things that I teach all of my students around the world. And so this is what we are doing with Specialist Trading and ProTrader strategies. We're educating and mentoring all our members in virtually every state in the United States, the same things that were taught to me, and that what I believe have been the cornerstone and the ability to sustain my trading for over 4 decades now. So hopefully they'll be able to do the same thing with all of you and all of my students around the world. Now, the way we formulated the masterclass is by asking all of our students around the world. I'd like to ask you this question as well, because we wanted to really dig deep into what was troubling a lot of people, prospective students or actual members of our courses. And we asked them, what is the most difficult thing you find about trading? So ask yourself that right now. If you're having difficulty, or even if you're a skilled trader, but you still run into these roadblocks every once in a while, what is the most difficult thing you find out? And we came up with a number of different categories and different answers, and maybe you'll see that you fit into these categories as well, because the majority of our traders said, well, trading the right strategy. They have very difficult time in finding the right strategy. They feel that what they're trading, their method, what they spent $10,000 on or went to some class or some course, it doesn't really reflect who they are, and they can't really trade it. So that's the most difficult thing. They can't seem to find or trade the right strategy. That was one answer we got. Another answer was that money management. A lot of students are okay with what they're trading or the market, but they just can't seem to get in tune with the money management, meaning that they'll have a series of good trades and they'll give it all back. Their stops are faulty. or their exits or entries, whatever it is that they're not making enough money, even though the strategy may be generating okay results, their money management is losing a lot. Or the time frame. I get probably on a daily basis emails from students around the world saying, Steve, what is the perfect time frame to trade this method you just taught me? Or, this strategy is great, but is there a better time frame than another? So a lot of students have difficulty with certain time frames. They don't know whether they should be trading long term, short term, intraday. And then finally, many students said that determining the trend. A lot of them have spent tens of thousands of dollars on systems or methods that try to pick tops and bottoms, and they may work every once in a while, but because they're out of sync with the trend, they usually give all the money back. And a lot of times, even when they purchase methods that are supposed to be in sync with the trend, they can't determine what the trend is. So they have very difficult times. So these are all very common things that a lot of students around the world had difficulty with. And you may find yourself in one of these categories as well. But there was one answer that stood out amongst the rest that most students identified as their number one difficulty with trading, and that was entries and exits. Okay, a lot of students said, you know what, my method is okay, it's just that my entries are faulty or my exits are faulty. I get out too early, or I get out too late, or I get in too early or too late. So this is why we focused on this, because most of our students said that entries and exits are what they find and have the most difficulty with. And think about it yourself. Are your entries or exits in whatever plan you're trading okay with your style? So this is what came to being with our masterclass. We wanted to offer a series where we pinpointed in detail the difficulties or the things that you're having difficulty with at this current time. So what we wanted to do is make this a series. Rather than focus, as we've done in the past in our colleges, where we devote 6 weeks to teaching you how to trade one particular or 2 or 3 particular strategies, we want to focus on particular area points in which you're having difficulty with, and really, rather than spend 20 minutes or a half an hour in our colleges, we want to devote 4 weeks to this. So our very first series is going to be covering that first topic, advanced exits and advanced entries. Okay, so this is what we're going to be talking about in our very first masterclass, because this is what most students have a very difficult time with. Now, I know you may be saying, okay, who's this for? I mean, I have a strategy that works okay, or maybe I haven't been trading that long, Steve. I just started trading, or maybe I have been trading a good time. I have been trading 20, 30 years. So who exactly is this masterclass for? Is this going to be too easy or too simple, or is it going to be too difficult? Well, think of this. A lot of our students said, I already have a strategy, but I need help in fine-tuning my entries. Well, then this is the masterclass for you, because we can show you how to fine-tune those entries, how to pinpoint those perfect spots for you that will make you feel comfortable in entering any method that you currently have. It's also designed for students who say, well, I often exit too early and I don't know where or how to get back in. I mean, think of that. This is a big, big problem with a lot of students of ours. They say, God, Steve, I love the methods, I love the strategies, but I get out and then the stock or the future or the currency pair just keeps on going. Or I want to get back in, but I just don't know how, because my strategy or my method hasn't given me a setup to get back in again. So how do I do that? Well, this is perfect for you. The masterclass is going to cover this in detail. It's also for traders who say, I want more trades, or even traders who say, I want less trades. I mean, there are a lot of students that buy the perfect system. It just looks fantastic on paper. And then once they purchase it and figure out how to trade it, they tell us, boy, Steve, I spent $10,000 on this, but it generates so many signals in a day, I can't keep up and I can't keep track of it. It's just too many signals for me. And even though on paper it looks great, in the real world, I can't execute this many trades. Or it's the opposite. They'll say, boy, this thing looks great on paper. The results are fantastic. And then I go and try the system or the method, and I get maybe 1 trade every month, or maybe 2 trades a month. I can't do that. I'm looking for extra income, and I can't wait to 2 weeks or 3 weeks for one setup. And so if you're looking for more trades or you're looking for less trades, we can help you with that as well. And then finally, this course, this masterclass course, is designed for traders who don't know how to add to long-term positions. So it's not just for traders, it's not just for intraday traders, it's also for investors. I mean, think about this. Even though we've had some markets that have been, some current days in the last month in February where the markets were really falling out of bed and causing a lot of concern. If you're an investor, in the grand scheme of things, the market is still okay. And the market has gone up very nicely for the last 5 or 6 years, okay? What if you had invested at the very beginning of this bull market and you wanted to increase your position size but didn't know how? Well, let's just say you kept your original position, which is great, but think how much more you could have had if you added onto that and pyramided onto that position. Well, we can show you how to do that. If you're looking to add to long-term positions, we can show you exactly how to do that. So let's talk about a little bit about the curriculum, and we'll share with you exactly what is included in each one of these different classes. Remember, this is going to be a 4-week live course taught by me, yours truly, Steven Primo, and you will have live classes with me, be able to ask me any question live in the online course. All right, so week 1, we're going to be talking about how to listen to the markets. You've heard me say this before in a lot of my presentations, and the reason why I focus on it so strongly is because as traders, we're always taught to listen to what some trading guru is saying on TV or in a chat room, or always taught to listen to what the institutions are doing, or always taught to listen to that economic news event that's supposed to come out about jobless claims or about interest rate. But we're never taught to listen to the most important thing, which is the market itself. All right, we're always focusing on learning how to listen to something else, but not listening to the source, which is what we're trading. So in this first week, I'm going to really focus on teaching you how to listen to the markets. This is a deeper understanding of trend and price analysis. And we're really going to go deep into it. It's not difficult. It's just a deeper understanding of how to focus on trend and price analysis. And once you understand these concepts, you can properly identify the market, what the market wants to do, and then simply jump on board with your entry. And then listen to the markets, and when it looks like it's running out of gas, well, you can jump on board with your exit. Now, in week 2, we're going to be talking about something entirely different. We're going to be talking about high probability entry points for virtually any market and any time frame. Okay, this is designed for any traders who want to focus on entering. Let's say you're a long-term investor. This is perfect for you. In fact, we'll show you some examples in just a few minutes. Or even if you're a short-term intraday trader, we're going to show you these high probability entry points that I was taught many years ago that you can apply to any method, any technique you currently have, and we really feel they will increase your odds for consistency. Now, that's in week 2. In week 3, we go entirely into something different. We're going to be talking about floor traders' secrets. These are things that I learned some 4 decades ago on the floor. And we don't talk a lot about them, but the only times we really have talked, I've touched upon them lightly, are in our colleges. But we're going to really delve deeply into this. These are with a focus on pattern recognition and indicators. And they're very common indicators, so you don't worry as if you have to, be able to understand some convoluted logic of how this indicator works. Most of the indicators you currently are using right now, but we just alter and edit them a bit to help you to define where your entries or exits would be. I would say that the majority of what I use in my personal trading is found in week 3. And we'll show you examples of just what that is. And then finally, in week 4, we're going to talk about one of my more popular tools and something I've been using on a daily basis as well. You've heard me speak about it before in past presentations. It's the PET-D. Now, usually when I talk about the PET-D, I talk about how great the PET-D is applied as a trend identifier. After all, its name is derived from the early trend determination. But it can also be used to confirm signals that you already have. Those are its main purposes, but there are dozens of other applications that can be applied, and some of the most prominent and consistent ones are for entries and exit techniques. And we don't spend a lot of time on that because I don't really want to give away the farm during the free webinars, but I'll go into detail about how you can apply the PET-D specifically for entering a trade and specifically for exiting a trade based on patterns within the PET-D. So these are, as you can see, we're really going to jump into this with a lot more attention to detail on how to trade with these specific things. I cover some of these topics lightly in our colleges, but I'm going to be spending 4 weeks on them in our masterclass series. This is our very first series. Now, as you see here, I'm outlining week number 2. Let's talk a little bit about what we'll be talking about in week number 2 in our live class. This is high probability entry points. Now, without giving anything away, let me just show you what's going to be offered. And remember, my mentors taught me these same things. And let's give you a little bit of taste of what the course is going to be talking about. Now, 4 decades ago, when I was trading on the floor, I struggled once again, just like everybody else struggles when they first start trading. And here's what my mentors taught me. When I was struggling with entering trades, when I couldn't figure out where to get in, where to get out, here's what my mentors taught me. They said, Steve, entering is really simple, but you're overcomplicating your entries because there are only 2 types of entries. You don't have to overcomplicate things. You just have 2 choices. The first is a continuation entry. All right. Now, if you're not familiar with what that is, it's basically trading within a trend. All right. So you see a nice trend underway. Now, a continuation entry just calls for you to buy. If you're in an uptrend, as we are here in this generic chart, it just calls for you to buy all the way within the uptrend. And you're not caring to get a lower price. You're not concerned with where you buy. You just feel as if that trend is strongly underway. You don't want to miss it, and you continue to buy as it goes higher. Now, who's this designed for? Well, if you're a continuation entry type of trader, you're the type of trader who doesn't mind paying up higher for price. I know that's a big deal with a lot of traders, and myself included. When I first started, I was a continuation entry trader. But now, I'd like to get a lower price. But if you don't mind paying higher because you know whatever you're trading is going to go higher, you really feel confident about it, you're a continuation entry type of trader. It's also designed for someone who likes a lot of trades, because if the trend continues to go higher and higher, for example, prior to this, I was trading the E-minis on an intraday chart. And we had this really nice rally about an hour ago where the markets just went straight up. There was a trend that lasted for a good half hour on an intraday chart where it just kept going higher and higher and higher. If you're a continuation trader, you could have bought all along the way using the techniques I'm going to be teaching you in week number 2. So that is the first type of entry. There is another one, which is a pullback entry. This is the second in the 2-part series of entries. A pullback entry is a little bit different. You're still looking to trade within the trend, as you see here. Let's say whatever you're trading, currency pair, future, stock, it makes no difference. It could be Bitcoin, is going straight up, all right? Well, where most traders look for is a top of that. And then usually that will happen and you'll start to get this sell-off, all right? Now, this is where people usually make the mistake where they say, well, that was the top. It's time to get out and time to reverse. Sell your long positions and now start to go short, look for shorting opportunities. But with a pullback entry, you know that the overall trend is still up according to what we teach you in the course in the masterclass series. And you know that overall, this is just a small little blip in price to the downside before we resume. So according to the parameters of a pullback entry, you wait for some type of pullback, some type of resumption back into some type of level, and that's where you want to purchase, somewhere around the pullback level, because you're waiting for price to go back higher. You see, pullback entries have this kind of a stair-step approach where you go up, you go back down, and rather than selling, you look for a nice place to enter at a lower price because you're assuming that price is going to go back up again in its upward course. That's a pullback type of entry. Now, who is this designed for? Well, it's designed for people who don't mind waiting for trades. You don't need to trade 10,000 times a month. It's okay. You can trade maybe, if you're trading daily bars, maybe 1 to 4 times a month, once a week type of thing, all right? Depending on how many markets you're looking at. It's also designed for traders who don't want to pay higher for price. They want to pay lower. They want to get an inexpensive price. They're looking for a deal for whatever they're trading because they're waiting for the trend to resume on its upward course, but they want to purchase at a lower price. They want to get a discount before we go back up, all right? So there is nothing wrong with either one. There's no way to look at it and say, well, that's too slow. That doesn't make enough money. Or that one, I can't pay higher. That's a recipe for disaster. You're going to buy at the very top. There's nothing wrong with either one. The only thing that's wrong is when you are trading out of sync with your true nature. In other words, you have to resolve and you have to define which type best suits your needs. So in order to resolve your entry difficulties, you must first decide which type of trader you are. Are you a continuation entry type of trader, or are you a pullback type of trader? And that will make all the difference. This is a big problem why so many traders fail, because They don't know it yet. They don't understand who they are as a trader, and they think they're supposed to be trading a lot. So they trade continuation type of method where they're buying higher and buying higher. And they feel out of sync. They're like a fish out of water. They don't understand, they're out of their natural state. And so they can't execute the method properly. They don't feel comfortable. And ultimately, they'll stop trading because it's just not in their realm of trading. All along, they probably should have been a pullback trader. And then vice versa, you purchase a $10,000, $20,000 course and you think, okay, I'm supposed to make money. The numbers look great. And then you find out that it's a pullback method and you're trading maybe once a month. And you're the type of trader who likes about, one trade every 10 minutes. You want a lot of trades. So ultimately you'll give up. Even though it may produce great results, you can't trade it. So the point is you have to first decide, and this is the most important thing, what type of trader you are, and that will make all the difference. Then once you do, you can trade the right method that suits your persona the best. The good news is that we teach you both, and we have tons of different ways to trade continuation entries and pullback entries within the 4-week masterclass series, all right? For example, what we'll be covering in week 2 are high probability entry examples. So let me show you exactly, without giving it away, what you could have taken advantage of. These are entry points designed for trading strong trending markets if you're a continuation trader, okay? So we look at this weekly chart of Netflix here. Someone looking at this would say, well, Steve, I'm a continuation trader. How could I have taken advantage of that? Well, with what we're going to be sharing with you, look at all the signals you could have taken advantage with on the upside. Remember, we're not looking to buy at lower prices, even though some of these were lower prices. We're just looking for high probability entry points to buy along the trend. All right, now that's a weekly chart. You can also do this to the downside. In TSRO, okay, how could we have taken advantage of this with a lot of sell signals? Remember, we're not looking to buy as we go down. If the stock, future, or currency pair is going down, well, then we're sellers as well. So look at all the sell signals that were generated, okay? You see how that works? We're always going to be in sync with the trend. And if you're a continuation trader, you will be, seeing a lot of signals being generated as well. Now that's one example here. Let's look at another example here in QTS. Now a lot of traders say, well, Steve, this is great, but I understand what you mean when you want to trade with a trend, but as we see here were signals generated with the trend. But what happens when that trend changes, okay? Do you continue to buy or are you left holding the bag here? Well, no, the beauty of our methods is that we change in sync with the trend. So once we, according to what we teach you, verify that the trend has changed, well, signals will no longer be trying to buy. Now we are sellers of the exact same method, but now we're looking to sell. So even though we're not going to sit here and tell you that every trade is going to be a winner, for example, these first series would have been some very nice winners, but once we saw that the trend changed, well, using our proprietary stops and exits, you would have had some small amount of losses, but been able to recoup them very quickly on the downside. Now, the entry points we're going to be talking about in week 2 are also designed for re-entering the markets. Once again, a very big problem with a lot of traders. They'll get into a trade, make a nice, cute little profit, and feel very good about themselves. The minute they come back to their computer, they go, oh my goodness, I just left tons of money on the table by getting out too quickly, okay? It hurts a lot, I know. I've experienced that myself, and I'm sure many of you have as well. A lot of times you want to get back in, you just don't know how to. Your strategy or method has not generated another signal. So how do you get back in? You don't want to buy at the very top. So how do you have the confidence to re-enter? Well, we teach you that in week 2 as well. For example, here was an example of a trade that took place. You would have entered somewhere around here and exited here in FOSL, and you thought, boy, that was a nice little trade, made a good little percentage on a very inexpensive stock. And then you thought that it was going to really fall out of bed, but it never did. In fact, it's starting to firm up. So with the techniques we're going to be sharing with you in week 2, you could have seen that 2 buy signals were generated just about a month later, and you could have taken advantage of this big upward move. So that way you wouldn't have had to kick yourself and say, gosh, I wanted to get back in, I just didn't know how, and now look at this big move I missed. This could work to the downside as well. Let's say you had gone short here in an hourly chart of the E-mini and made a nice little trade. You're feeling good about yourself, but you thought it was going to bounce up according to what your strategy says or your method. It was supposed to hit some very big institutional support here, but it's not really taking off, and you're starting to think, boy, this thing is going to go lower. So how do you get back in? You don't want to sell at the very low. With the techniques we teach you in week 2, you would have seen a sell signal was generated right here, and you could have taken advantage of the further drop in the E-mini on an hourly chart. Now these things we're going to be teaching you in week 2, these are entry points also designed for trading strong pullback markets. We're not going to just focus on continuation entries, we're also going to be focusing on continuation entries. For example, right here in Pepsi, we see we had a nice run, and here it looks as if we're topping. Let's say you thought there was a top here, and this didn't confirm it. In other words, the indicator that you follow, or maybe the institutions, didn't confirm this second top. So you think we've topped out, we're going to come much lower, and now it's time to sell. Well, using what we are going to be teaching in week 2, you would have seen that no, the overall trend is still up. This is just a pullback in an overall uptrend. So if you're the type of trader who likes to look for a discount in price and buy at a lower level, you could have taken advantage here before we resumed the uptrend. So we're going to, you see how there's many less signals here, much less signals here using a pullback technique, but that's okay. Remember, all that matters is that you're in sync with what you feel comfortable with. Also here in Tesoro, now before we were trading it with a lot of trades. Now if we only want to take pullback trades, well, we could have seen that there were only 3 trades at the very top of that pullback. One here, a nice sell-off, another one here, a nice better sell-off, and then the last one, look at the nice sell-off here, okay? So before we looked at Tesoro, where we had a number of signals to go short all the way down, because that was a continuation type of method we were using. Now we're only looking at pullback entries, far less trades, but higher in price, so we got a better price to sell. Here's another example, a weekly chart of letter H, okay? You see here how we're in a nice defined uptrend. Every time we come down lower, we bounce, we come down lower, we bounce. Here we've come down lower again, and at all of these lows, our proprietary pullback generated a signal, and look at the nice uptrend that continued after that, okay? So if you're the type of trader who doesn't mind waiting for high probability pullback entries, you'll learn all this in week 2. Here's another one, a 4-hour chart of the euro-yen, just to show you that it makes no difference what time frame, it makes no difference which market. Rather than thinking we bottomed out here, we have support, or now we're going to go back and make up new highs, we teach you that this is overall downtrend, and all this is a small bounce. A sell signal is generated here, and the trend resumed to the downside, okay? So looking back this last 3 weeks or so, you only had one signal, but it was a high probability pullback signal. Now we're also going to teach you entry points designed for adding to long-term positions. So not to worry if you're not a trader or a swing trader, but an investor or just someone who likes to add to your positions, you can use what we're going to be teaching you in week 2 as well. There's that chart of Netflix, but now we're looking at a monthly chart. Let's say you were lucky enough to go long somewhere here in 2013 when the stock was trading in the 20s, okay? Well, guess what? You've got a nice investment now with Netflix, the way it's doubled and increased in price and quadrupled. But let's say you wanted to add to this position. Let's say you're a fundamental trader, you like to read the company, you really feel confident that it's going to be just a major company going decades into the future. So rather than just hold on, you want to continue adding shares. Well, we teach you how you could have added at all of these spots right here in this continuation method for a longer term play. You can also do it to the downside if you like to purchase puts or any type of spread that has a negative bias. Here's a weekly chart of GE. Now, someone looking at this would say, well, Steve, this looked like a perfect place to buy here. I thought maybe I should buy, but actually looking at this now in hindsight, this was where you should have been selling. Well, if you were a seller, guess what? You could have been purchasing puts all the way down or selling calls, however you wanted to do it. If you were an owner of the stock of GE, you could have been hedging it by selling calls the entire time down here. We also are going to show you entry points designed for traders who want either more or less trades. Remember, if you're a continuation trader, you like a lot of trades. As you can see here, most intraday traders like a lot of trades. Here's a 15-minute chart of the E-mini, and look at all the setups you could have had on this 15-minute chart here just about a few weeks ago as the market went higher. And you can generate just as many signals as you want in an uptrend and in a downtrend. A daily chart of KBR, you can take a lot of signals, or you can only take short signals if you want. It's entirely up to you. Here's BUFF. Signals are generated all along the way as it went up higher, and then as it kicked up even higher, you saw that you were on the right side because you were in sync with the trend. So we're going to be talking about advanced entries specifically in this series, but we're also going to be talking about exits as well. So we don't want you to just think we're going to be focusing on to get in. The only point is I can't talk about the exits that much, because if I talk about them, I'll basically be giving away all the proprietary information that I want to teach you in the master class. But let me just show you how some of our exits can be applied. Floor Trader exit series secrets in the series week number 3 are based on patterns and indicators. And as I stated earlier, these are things that I use primarily in my own personal trading. Here is a setup where you would have been generating a buy signal right here and had different exit points. One right here, another here, and another here. So it's up to you to decide what you'd like to take. Many of our traders like to use these 3 different exit points, and what they'll do is exit a portion of their position here, exit another portion here, and get out altogether here. Still others will say, once we get up to exit level 1, I'll move my stop to unchanged. I'll sell half my position here, the other half here. Still others will say, well, once we get to exit level 2, I'll move my stop to exit level 1. Once we get to exit level 3, I'll move my stop to exit level 2, and then just let the rest ride as it goes higher. There is no right or wrong way, and we teach you all the different variables in the course. So we're going to be focusing on exits as well. I just can't go too much in detail with exits, because if I do, well, then I'm giving away everything for free here in the presentation. I don't want to do that. So one last time, let's cover what we're going to be talking about in the 4-week live class here. Week 1, teaching you how to listen to the markets. Remember, most of us, when we're taught, are focused on things that we shouldn't be focused on. We're listening to some guy who's supposed to be some trading guru who probably doesn't even trade, or we're listening to some institutions, what they're doing. We're not listening to the market. I'm going to show you how to primarily listen to what the market wants to do, and it's very, very simple. In week 2, we're going to be talking about what we just showed you, some high probability entry points. Remember, these are designed for traders who don't know where to get back in. They're designed for traders who like a lot of trades, continuation entry trades. They're also designed for traders who like less trades in a pullback type of form. In week 3, we'll talk about what I mainly use. These are floor trader secrets. This is going to be specifically devoted to pattern recognition and indicators, okay? And we're going to show you how to alter and edit these indicators that you can apply on your platform. And then lastly, we're going to be talking about the PET D, all right? This is our most popular as well as our most powerful trend identifier, but we're going to be showing you how you can also use it to define where to enter and where to specifically exit trades. It's got dozens of uses, and these are some of the uses I just talk about very lightly, but we're going to go into detail in week number 4 and show you how the PET D can specifically show you where to enter and exit in any market in any time frame. Now, if you go to my website, if you go to ProTrader Strategies, you'll see we have tons of testimonials for people who have taken our courses and our colleges in the past. Remember, it does not matter whether you've been trading a few weeks or, for example, if you've been trading for 20 or 30 years as this hedge fund trader has traded with us, okay? Your experience level makes no difference because we teach everyone the same basic formats. Now, we're going to be offering you a great discount today, all right? This is a great offer we have for all the people. This is actually going to be our early bird special. We're going to be discounted about 10%. Here's what we're offering. Here's our 4-week masterclass. Remember, 4 weeks of detailed instruction, live classes. Now, we record it, so if you can't make the live classes, that's okay. But we would rather have you in the live classes so you can actually ask me questions over the internet, and we can talk and look over charts that you're interested in, okay? Now, we're not just going to be stopping with the 4-week class, which is tons of information. We're also going to be throwing in something special. We're going to be throwing in 1-year PTS Primo charting platform, okay? This is if you sign up now with the early bird, you're going to get 1 year of our platform, which makes trading everything I'm going to be teaching you in the masterclass so simple, because all the indicators, the PET D, all the different strategy entry and exit setups are all right there already pre-canned. So all you have to do is simply click on one of the signal tabs or the PET D, and it will automatically be displayed on the chart, whatever time frame you're looking at. So this is a great, great offer. If you sign up now, you're going to get 1 year free of the PTS Primo charting. This is the educational portal we know you've been searching for. Everything I've accumulated in my 41 years of trading is right here in front of you. So this is the masterclass coming with the PTS educational platform. 4 weeks of intense information strictly devoted to entries and exits. Now, normally, this would roughly cost you close to $7,500. We discounted the price down to $5,000. As you can see here, you're going to be getting entries and exits such as this. We've discounted the price down to $5,000, but we're not stopping there, okay? Because we know that you're going to be really wanting to be a member of this course, and you can't wait. So we're discounting it an extra 10%. So roughly, we'll be offering this at a discount of $49.95. We're also discounting it down to $44.95, and we are including 1 year of the free platform. This is a great, great offer. Plus, you're going to have yours truly teaching you live in class, and we're going to really go into detail how you increase your odds for consistency with entries and exits. So here's how to take advantage of this great offer. Classes will be starting soon, and we want to make sure that you can take advantage of this early bird special. Contact my sister site, ProTrader Strategies. They handle all of our marketing and our course discounts. You can email them at the email address there. I would recommend more that you call them directly at area code 310-598-6677 if you're interested in putting together some type of payment plan, or you're interested in talking more about the platform or more information about what's included in the masterclass. Now, the link you see at the very bottom is the link that will take you to the sign-up page with that discount. If you look on the far right-hand corner in the chat box, there is a live link there. You can actually just click that on. I would recommend clicking that on, and that will take you right to the sign-up page, okay? So I'm going to leave all this information up here while I go over any questions that you may have had. Let me just open up the question and answer box. And Steve Sorgiano, he's a customer of ours, says, Steve, he's using the PET D. The spiders have shown red bars for the past week, but yesterday and today the bars became open red because as opposed to solid bars. What is the difference? Well, remember, if I just want to share this very briefly, because I know not everyone is a PET D course member, but the PET D its first use is as a trend identifier. Now, it's simply telling you, and by translating what the market wants to do, okay? So how it does that is by coloring the bars, either green or red. Now, it does not care if those bars are up or if those bars are down. It's telling you what the trend is. So many times you can have an up day and the outline of the bar is red. So that's telling you that the short-term trend is down, even though we had an up day, all right? Or many times you can have a down day and the bar is colored green by the PET D. That's just telling you that, guess what? We're still in a short-term uptrend. Even though today was down, that's okay, all right? So it's very simple. It's just that we've been always taught, once again, how to listen to the market a different way. Just think of it as that the PET D is telling you the short-term trend. Whether the day was up or the day was down makes no difference. The color is what you should be focusing on, okay? I hope that answers your question. Some people are asking about, will we be talking about stops? In the masterclass, yes, we will be talking about stops, but more in a way of exiting, a way in which to track your trade. I have some special ways in week 3 in the pattern recognition where I will be sharing with you different patterns on how to exit a trade by moving your stop up. These are things that I was taught on the floor. They're proprietary techniques. And so a lot of times there are different types of exits. I'll explain what those are in the course, but there are predefined exits, and then there are variable exits or flexible exits, which mean that they follow and track the market. So in this, our stops will be mainly applied for tracking the market, okay? Some people are saying, Steve, I already have the platform, or they were saying, Steve, I already have the PET D. Can I get a discount on this, or will this apply? I'm sure there will be. Contact ProTrader Strategies. If you already have the PET D, or if you're already a member of our PTS Primo charting platform, I'm sure they can alter the price for you or throw them in some type of payment plan so you won't have to pay as much because you're already a preferred customer. But since they handle all that side of the business, contact them, and I'm sure they would be more than happy to set you up with a new type of plan, okay? As we close here, remember, we asked students around the world, some of our own students, as well as a poll we took, and we asked students that, what the most difficult thing was. And after getting scores of different replies, what we really found out was that entries and exits are the #1 thing. Now, as we go forward, we're going to be talking about other series, such as trade management, or such as money management, or even just solely focusing on Pet D analysis. But right now, we want to kick off our very first series with the most difficult thing that most traders responded to, and that was entries and exits. So if you're having difficulty with these in your personal trading, and you just want to increase your odds for success, remember, it doesn't matter what strategy. We're not going to be focusing on strategies. We're not going to be talking, so it doesn't matter if you base your entries off of fundamental news, or if you base your strategies off of something that you've devised yourself. That's okay. With what I'll teach you in this 4-week live class, we really feel strongly that you will be able to increase your odds for consistency by applying these specific entry and exit tools, okay? So there's the information you need right there in front of you. Take advantage of this early bird pricing, this 10% discount, as well as 1 year of the platform. I can't think of a better way to apply what I'm going to be teaching you than to have access to our PTS Primo charting platform, okay? It's going to be a great way to learn, and you're going to see how simple it is, as opposed to trying to find it on other platforms, okay, and trying to look for the things we have on other platforms. And remember, ProTrader Strategies can construct a payment plan with you. They can put together something for you to meet your needs. So don't worry if you can't come up with one lump sum. They can devise a payment plan for you and get you up and running, okay? The classes are closing up quickly, so be sure and take advantage of this. As we close, I just want to say thank you so much for attending today. I hope you got a little bit of knowledge about the two different types of entry points, how we overcomplicate our entries. And that was just a small tip of the iceberg of what I'm going to be teaching you in the 4-week course, okay? Thank you so much for attending today. I look forward to all of you becoming students of mine in our first masterclass series on entries and exits. Thank you so much. I'll see you next time. Bye-bye.